We, again, encourage investors to say, don't rely on China, for example, as your number one reason why you own Tesla.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to some comments from Morgan Stanley regarding a warning to Tesla stock investors not to rely on China. We'll look at some comments from Jonas, as well as some recent research published by Morgan Stanley detailing some of their concerns around Tesla's future in China. So let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
I do want to get your thoughts on Tesla. I mean, given just the strong and swift crackdown we're seeing on Chinese-made companies right now, what are your expectations, or how are you gaming out the risks for U.S. companies that are participating in that market like Tesla?
Thanks, Morgan. So, yeah, from a Tesla perspective, we are very constructive. We're overweight, have a $900 price target, but we're pretty skeptical on the long-term future of foreign companies that operate in dual-purpose, arguably military-grade AI for civilian use in natural monopoly networks in foreign countries. And it's not just China. We think other nations are going to start looking at the automotive industry as like a utility where the GDP and national security of the country runs on it. And for people who think that, we're overreacting here, I would ask your audience to imagine a Chinese transportation autonomy company operating its services and conducting services in the city of Boston or Miami. Would that be something that would really be realistic? I don't think so. So without, singling out China, we think this is just where these industries are going. They're a lot more, when you connect the cars and add the AI, it gets real sensitive.
You just mentioned you're constructive on Tesla, and you also said China, but more than just China, that this is essentially a global dynamic that's going to continue to take shape. That being said, I mean, for Tesla, it is these international markets that represent potentially the biggest growth levers in coming years.
They do, but we again encourage investors to say, don't rely on China, for example, as your number one reason why you own Tesla. I talk to some investors that think that Tesla will have 50% market share of like AI, robotaxi, or something in China. It's just, to us, that would be equivalent to a U.S. telecom company operating in China. It's just not where the market's going. And please don't just take my word for it. Talk to automotive executives as well. When you connect the cars, it gets sensitive. So we are positive on Tesla due to their growth, not so much geographically, internationally. Yes, there's opportunity, but more taking their model lineup from just 4 today to maybe 24 in the coming years, addressing markets like vans and trucks and SUVs and fleets, which they don't today, and then getting into that the recurring software-based revenue, the SaaS revenue, which we think could have potential well beyond our $900 target.
Jonas, I'll have what you're smoking, dude. Seriously? 24 models of Teslas in the future? Let's think about this. They got 4 today. We've got the Cybertruck, that gets us to 5. A van, that's 6. Model 2, that's 7. Maybe in the more distant future, a Model 1, an even cheaper iteration, scaled down version of the Model 2, which is a scaled down version of the Model 3. The Semi, we've got the Roadster, if you really want to count that. We're about 10 models now. Maybe in the future, an ultra compact microcar, city car, something along those lines. Then you've pretty much got everything covered. So yeah, okay, cool. Let me know in the comments below. Do you guys think that Tesla's going to continue to release different models after model after model after model? Personally, I think they're just going to produce one category killer in all the major categories of terrestrial transport, as per their secret master plan. What a surprise. And as for China, Morgan Stanley may have a point. Let's look into some of their recent research that expands a little bit more on these points about China. 3 key thoughts on Tesla China from our China team. And FYI, Morgan Stanley have an overweight rating on Tesla stock and a $900 price target. 1. Anti-Tesla policy elements, plus mixed quality perception, plus local Shanghai regulator support, plus product strength equals consumer still supports Tesla today. What a mouthful. So we have seen the Chinese government prohibit government employees from buying a Tesla right now. Our China team says this has become a national government policy. Despite the government restrictions, our team believes Chinese individuals still like Tesla and say the brand is still strong. But the team acknowledges the potential for Tesla quality issues to be exaggerated in the media. No shit, Sherlock. This is certainly not unique to China. This is a global issue. For example, if the driver of a car hits a policeman, the headline becomes Tesla hits a policeman rather than the driver itself. This is also true, and again, this is not unique to China. This is just how the media operates everywhere. The media, by the way, also being known as the fake news for a reason. But when our team speaks with the local Shanghai regulator about Tesla, the impression is that they are still open to Tesla and still want Tesla to participate in China. The Shanghai regulator says that Tesla has brought a lot of benefits to the country regarding battery electric vehicles. Tesla brought EV awareness to consumers and accelerated the development of the EV supply chain in China. So it's seen by the local regulator as bringing more benefits than not. However, according to the national Chinese regulator, they see Tesla becoming more of a threat to the local Chinese EVs. Overall, the team believes Tesla will still be very strong in China, and consumers still like Tesla, as June volumes, which picked up significantly, have suggested. So I just want to chime in here. I think one of the core reasons that China was so welcoming to Tesla was the very reason that it's accelerating their transition to electric vehicles. The Chinese government is very bent on transitioning everybody off ICE vehicles. There's all sorts of incentives to consumers purchasing electric vehicles. Bringing in the world's leader in electric vehicles, opening the door, rolling out the red carpet to Tesla was a great idea, and this has spurred on a huge amount of innovation and competition within China. Overall, policies have been very friendly. They've got special deals, special financing, certain exemptions on import duties, etc. I don't really see any reason this would change. But that being said, I do understand that the Chinese government is likely to favour their local players. But that said, Tesla is so competitive that even without the same helping hand as local EV makers, I still think they're going to do very well in China. 2. We still need Tesla to grow the China auto industry for now. In our team's view, the Chinese auto policy will stay relatively accommodative to foreign players and don't believe the Chinese government is trying to wipe out foreign EV players. Just jumping in here, I completely agree there. I mean, that would be counterproductive. In the near term, China may be trying to slow down Tesla's China expansion, but overall, the country/government still wants the talent, patents, technology, and even the foreign capital to support EV growth in the years ahead. Number 3, investors should expect China to get stricter on the collection of and use of data. Our team does believe China electric vehicles will be a story of 2 markets. China cyberspace regulators have already indicated that they will require OEMs to locally store the data from vehicle cameras/vehicle sensors that is needed for autonomous driving. The regulations around autonomous driving in China should get stricter over time and may present increasing challenges to foreign automakers in the years ahead. Our team reinforced that local regulators in Beijing have expressed that Tesla's cameras could pose national security sensitivities to China. They want the data to stay in China and not be transferred back to the US. This is the key concern when enforcing laws preventing Tesla vehicles from being driven to any government office buildings. And again, I just want to jump in here. We've heard a little bit about this recently. There was a request Tesla to store their data locally. They're already doing this, not a big deal. And I can understand where the Chinese government is coming from here, but I don't think this is a make or break deal. All data being collected is being stored locally in servers in China. Well, what's the problem? Tesla's complying, not a big deal. We continue to recommend Tesla shares and reiterate our $900 price target. We note, however, that our overweight thesis and valuation is based on Tesla's commercial development beyond cars and outside of China. Specifically, we would point to our bullishness on Tesla's potential to derive recurring revenue from its installed base and its ability to expand its production and commercial footprint outside of China. Longer term, we believe, among a wide range of potential outcomes, that the value of Tesla China may come down to the percentage ownership the Tesla parent would own in a separate Tesla China legal entity. So a little bit of speculation here over the longer term in terms of Tesla's potential in China being stifled by the government and regulations and all sorts of concerns around autonomy. I think there may be a grain of truth in this, but I think they're overdoing it just a little bit here. Of course, maybe I'm overly optimistic. Let me know in the comments below. What do you guys think? Is Tesla going to have serious issues in China over the long term, especially in terms of operating a robotaxi network? One thing that I really just want to touch on, however, is the key to Tesla China isn't necessarily their operation within China itself. Yes, this is an important piece of the puzzle, but Tesla having manufacturing facilities, one so far and likely more in the future in China, allows them to produce vehicles with much higher profit margins and or lower purchase prices to be exported to many other parts of the world. Localization of the supply chain means many parts are much cheaper to acquire in China than the equivalents in the US or Europe would be, and in addition to that, there's much lower labor costs in China as well. This means that Tesla's vehicles produced in China can either be sold for less and or have higher profit margins and drive profits for the company, whether or not they're sold within China or exported out of China for sale in other countries. I'd love to know what you guys think in the comments below. Do you think over the medium to longer term, Tesla is going to have major issues in China? Perhaps the Chinese government even bans Tesla entirely from operating a robotaxi fleet? Is this a reasonable and valid concern from Morgan Stanley, or are they a little bit out of their mind? And before I wrap this video up, I just want to leave you guys with a little bit of food from thought, a tweet from Sam Corus of ARK Invest. I quote, "Early adoption and FUD often go hand in hand. It's amazing how much progress has been made and how early it is." And we can see here, Tesla's share of total vehicle sales in China. By the way, this is total vehicle sales, not total electric vehicles. Notice the trend. 2019. 0.2%, 2020, 0.7%, 2021 year to date, and we're only halfway through the year. Already 1.3% market share. To me, this seems like a relatively bullish sign. Those of you who are regular viewers of the channel will notice I've been showing a lot of exponential growth curves in the last couple of videos. This is another example of the early days of exponential growth. Just look at this rate of growth. What do you think 2022, 23, 24, 27, and 30 look like? Really? Give it some thought. It's very easy to get caught up in the noise and the FUD, but the numbers don't lie. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.